Welcome to the press conference call for the October edition of the Philadelphia Fed's Business Outlook Survey. Today we will learn what manufacturers had to say about business activity for the month of October. I'm Danielle Mazzone, Media Relations Representative at the Federal Reserve Bank of Philadelphia, and I am joined by Senior Economic Analyst Mike Trebbing, who will start this conversation with a quick overview of this month's survey.
Good morning. Our regional manufacturing survey's broadest diffusion indexes were all positive again this month, indicating continued growth for the sector. The indicator for general activity, shipments, and employment all fell back from their higher readings in September, but the new orders index actually improved. The survey's price indexes suggest about the same level of price pressures for inputs as last month, but the percentage of firms reporting higher prices for their own manufactured goods was up a little bit this month. The overall expectations for the next 6 months remain overall optimistic, despite declines in most of the 6-month indicators. The future employment index moderated some, but 1/3 of the firms still expect to increase their employment over the next 6 months. And I'll draw your attention to our supplemental questions this month, which focused on the firm's current rates of capacity utilization compared to the same time last year. And we also asked for their expectations for capital spending for next year for different categories of capital spending next year compared to this year's levels.
So Beth, do you have any questions for us?
Yeah, Mike. What are your thoughts about the answer to the question on capacity utilization and capital spending? What is it telling you, or what could you say to me about that?
Yeah, we've been asking this this question for quite a few years, and it's a way of telling us whether the firms that we're surveying look a lot like the ones that we calculate capacity utilization for the U.S. And sure enough, the rates that we found were pretty close to the average that we calculate for U.S. manufacturing. So we've got a good group of firms in terms of sampling, we think. So, and also their utilization rate increased from the same time last year from about 76.5% to 78%, which is comparable to what's happening at the U.S. As well. So we're getting back to capacity utilization rates that are very close to where we were before the recession, and it's an indicator of not only the potential output of these firms, but also how much of that potential output is being utilized with their current resources. And we also related the capacity utilization question to the responses that we got on capital spending. And it's probably no surprise the firms that had higher rates of capacity utilization generally had higher expectations for capital spending higher next year compared to this year. There was a fairly good relationship there, and that's not too surprising. The firms that are doing better are more apt to invest in capital, especially non-computer equipment. Although we still have not as many firms expecting to expand on physical structure, the buildings, etc. It's the investments are occurring in software and computers and equipment.
Okay. So what is the answer to these questions, the special questions, tell you about? What does it portend for the economy, do you think?
Well, I think that we're seeing some pickup in capital spending. We've been monitoring those every month in our indicators, and as we grow, as we get more firms into that higher utilization rate, we can see maybe a pickup in capital spending. It's hard to tell from these kind of survey questions how robust that is, and it's not across the board, but at least we're seeing in indicators compared to prior to prior years, a little bit of an improvement there, because capital spending has been somewhat a disappointing area of growth in this recovery. But we're seeing some marginal improvement even in our survey here.
Okay. Okay. Well, that's all I wanted to ask you. Anything else you wanted to add?
No, the overall report was still good despite some moderation in the indicators. I wouldn't make as much out of the moderation because they're still signifying growth, and we had another read on U.S. industrial production this morning, and it was fairly solid in the manufacturing sector. So our survey is not telling a different story than that number for the U.S.
Okay. Okay, great.
Okay, thank you, Beth.
Thank you.
The next Business Outlook survey will be released on Thursday, November 20th at 10 a.m. Eastern Time.